I'm Adam Willems. I'm lead reporter at the Financial Revolutionist.
Hi, I'm Laura Kornhauser, co-founder and CEO of Stratyfy. We're focused on helping lenders say yes to more borrowers safely without increasing risk and ensuring that bias doesn't creep into their decisions.
Thanks so much, Laura, for joining us.
Thanks for having me.
Yeah, I'd love to hear how you think SVB-related developments and the contagion in the wake of SVB's receivership might affect the concerns that really are at the center of Stratyfy's work.
Absolutely. I think what we're going to see in the wake of SVB is increased focus on audit control functions within financial institutions. It's clear that a lot of those functions kind of broke down, and you're going to see a more, I would say, pressure both internally and externally, whether that's from board shareholders, regulators, on ensuring that that doesn't happen again. We also believe that there's going to be a really increased focus and scrutiny on things like fair lending risk, which we're really focused on at Stratyfy.
Are there any downsides you think that will happen in terms of fairness?
I think that we could see credit tighten quite notably in the wake of not just this, but other market effects. And unfortunately, that could really put us back in terms of fairness and in terms of access. That's my worry, that we're going to see lenders use, I'll say, blunt instruments to tighten up their risk profile, and that's going to result in them closing their doors and turning away a lot of lenders and really like pushing back a lot of the progress that we've made over the last few years in fairness. That's why we think it's so important that when lenders are tightening up those risk reins, they're doing so using really, I'll say, precise measurements of risk and better risk models, such that they're not just chopping things off and leaving a lot of potential borrowers, potential customers out in the cold without options.
Right. So what are those blunt instruments and what are those precise measurements?
Absolutely. Blunt instruments is just going straight into your credit box or your credit policy and making everything more stringent. So moving up your FICO cutoff, below which you would decline a lender. Moving down your LTVs, right? Again, above which you would decline a lender. If you just move those, what we often think of as rigid criteria or the rigid shape around your credit box, just to more conservative, all you're going to do is really narrow the amount of borrowers that you have the ability to potentially bring in as customers, many of which could end up being really good customers.
Right.
More precise instruments. Oftentimes, this is where someone like me might talk about machine learning. So there's a lot of benefit that machine learning can bring to credit decisioning and credit underwriting models, but it's super important that that's done so in a way that's visible, transparent, and still enables the lender to have control over those decisions. So using, yes, a more powerful, we'll just say powerful instead of machine learning, modeling approach is something that lenders should absolutely be doing right now to get a more real sense of what the real risk is of a given borrower, but ensuring that they're doing so in a way that keeps them with the visibility and the control and the insight into exactly how those risk decisions are made. So no black boxes, no just I'm buying a score or a model from someone, making sure the lender still has that control and that ownership and visibility.
Absolutely.
Yeah.
Okay, my last question is, you've described sort of this fork in the road where in one direction, banks and lenders might be more stringent, and on the other, they might be more stringent in a very blunt way.
Yeah.
What kind of indicators will show us whether the banking sector is headed one way versus the other?
Amazing question. I think we're going to really see it in what types of lenders are coming into the bank, or excuse me, what type of borrowers are coming into the bank and what types of borrowers are actually being accepted by those lenders. If we start to see that, oh, if my FICO score is below 680 or 700, or you pick the number, I'm just getting massively rejected. I'm getting rejected by everybody. That's when we know that the blunt instrument is being used and not these kind of more finer precision tools. We start to hear more and more stories about borrowers that just can't find any good options. They can't find anybody that will, really look at them and really evaluate them beyond just 1 3-digit score. That's how we're going to know. We're going to hear those stories from borrowers. We're going to hear them in the media.
Right.
And I just hope that there'll still be lenders out there that want to see those borrowers and want to do the work to bring those borrowers in the door, because they're ultimately good customers.
Yeah.
Right. It ultimately makes not just top line, but ultimately bottom line sense for the lender to do that. So I hope we'll see some of those stories too.
Great.
Yeah.
Thanks again.
Thank you so much.
Yeah.